Good morning and welcome to Dornbush Download number 178. Kindly joined today by our paraplanner, Brendan Jones. Good morning, Brendan. How are things?
Good morning, Michael. Yeah, good. Enjoying the rain. It's good to see things greening up.
It's tremendous at the moment, isn't it? I've had to actually mow my grass 2 consecutive weekends in a row, which I haven't had to do for a very long time. So thankfully I've got a son too that does the vast majority of it for me. So
very good.
Thank you, son, for that. But another exciting week on markets. We've sort of blown through reporting season, Brendan. Some pretty good numbers. Coming out all in all, I think the broad figures roughly were about 90% of companies made a profit, 50% plus either met or beat expectations. Earnings weren't fantastic from a growth perspective when we look back at the same period last year. But that was probably expected, to a fair degree. Dividends got a little bit of a kick up as well, but a lot of information coming through. As always, there was a couple of stars, a couple of villains as well.
Yes, that's right.
But we've now seen the majority of the reporting season go past, so we'll recover from that. A lot of companies going ex-dividend now, and it is dividend cycle. So on the reporting front, things are just about done and dusted. But probably one thing, Brendan, that's popped up is Donald Trump's decision to look at reintroducing some tariffs, predominantly on steel and aluminium. So, that was an interesting sort of turn of events, I guess, wasn't it?
That's right, yeah, 25% possibly tariff on steel and 10% on aluminium. So I guess effectively it's a 25% and 10% tax on those imports. And interestingly, the 3 biggest exporters to the US for steel is Canada, South America and Brazil, so I'm sure they're sweating on the results, what's going to happen there. But yes, I guess on the other side of things too is American car makers. They use steel in their cars, and in that case it could see American cars get more expensive for Americans. So I guess Trump's thing of make America great again is sort of running here, trying to protect jobs, but it could also cost jobs too in some cases.
Yeah, and the steel industry is a real traditional sort of industry for America, isn't it? Been around for hundreds and hundreds of years. Railway development, I guess, predominantly in the early days, but through the Industrial Revolution, et cetera, et cetera. So, but yeah, certainly Trump's aim at this stage seems to be to protect national interests. There are a myriad of other arguments that suggest, of course, that tariffs actually can cause more harm than good. I guess, only time will tell, but it's certainly not a done deal at this stage. Last bit of commentary out there, I think, is that the suggestion, could be it gets watered down quite dramatically, or even postponed into the future at some stage. But that's something we'll be keeping an eye on, because I think Trump too's got some ideas about putting some tariffs on foreign-made vehicles as well. So
yes, he's threatened that, hasn't he?
Yeah. So again, going back to this real sort of nationalistic sort of perspective, trying to sort of put the Khyber on trade agreements and free trade arrangements, and really, I guess from his point of view, doing stuff that he perceives as in the national interest. But again, certainly history suggests that tariffs again perhaps aren't the best way to go.
Yes, no, that's right.
I guess on the other news front, Brendan, and fresh off the press, I might add, Commonwealth Bank are doing another round of pearls. Issuance. Pearls number 10, I think we're up to now. So.
That's right. CBA PG is expected code for that. 750 million is the raise, and I believe it's 3.4 to 3.6 is the expected margin over the 90-day bank bill swap rate. So, and paid quarterly. So there's, I guess, for those that are possibly looking for some income, it's something to consider, mate. But it's an interesting one.
Yeah, and the second of the big banks now to offer one, aren't they? And of course, these things have been bubbling away for years and years, but they all seem to sort of bring them out in reasonable quick succession of one another. A few weeks ago, we saw the Westpac guys come out and introduce one. Theirs was only 3.2% above the 90-day bank bill swap rate. So this one from Commonwealth, as you mentioned, Brendan, 3.4 to 3.6, probably likely to come in at 3.4. History tells us they tend to come in at the bottom end of the range or at the bottom of the range. But certainly, good alternatives if you're not prepared to fully sort of expose yourself to the ordinary shares and the volatility in the share market at the moment. But perhaps look for looking for a bit better kick than money sitting in a bank or in a term deposit. These things, do carry some risk. They are listed, so they will ebb and flow with the market. And there are a couple of sort of potentially tricky clauses if in this case, the underlying provider, Commonwealth, runs into some trouble. But, we've had some reasonably, good success with them. And certainly they're another, potential string to the bow to add, if you haven't got something like this in your portfolio. So we're looking at putting our hand up to grab a few. So hopefully we get allocated a couple. But certainly have a chat to your advisor if you're interested. Existing Commonwealth Bank shareholders and note holders will get those little slips in the mail sometime soon. But certainly worth having a look at if you are looking for something that might be sit in between the ordinary share and the bank account, so to speak. I think, Brendan, just doing the maths quickly, what would the dividend after franking be on those at say 3.4%?
That'd be 5.24%, I think.
Okay, yeah. So it is. They're reasonably good income payers, aren't they? So well worth a look at if something in that space might suit. Other than that, mate, I think we're just about done.
I think we are.
Yeah. Thanks again for watching.
Thank you.